So, today we're jumping right into one of the most fascinating rivalries in all of decentralized finance, a real battle for the future of perpetuals trading. You've got the reigning champ on one side, and this explosive, up-and-coming challenger on the other. This is Hyperliquid versus Aster.
And to really get a sense of what's at stake here, just look at this number. $1.05 trillion. That was the projected trading volume on Perpetual Dexes for a single month. Yeah, this isn't some tiny corner of crypto anymore. This is a massive financial battleground, and the fight is getting intense.
Okay, quick sidebar. For anyone who's new to this, what exactly is a Perpetual Dex? Well, think of it as a decentralized exchange where you trade something called perpetual futures. These are basically contracts that let you bet on an asset's price, and here's the key part, they never expire. You can hold your position pretty much forever, often using leverage to make your bet even bigger. It's definitely high-risk, high-reward stuff, all happening right on the blockchain.
So first up, let's talk about the reigning champion, Hyperliquid. For what felt like an eternity in crypto time, this platform was the undisputed king of the hill. It was built from the ground up with just one thing in mind, pure, raw performance for the pros.
So what's Hyperliquid's secret sauce? Well, it's not just another app. It is its own blockchain, a custom-built Layer 1. The whole thing is engineered from scratch to do one job incredibly well, run a super fast on-chain order book. You know, a totally transparent list of all the buy and sell orders. This is a machine built for traders who count their profits in milliseconds. So how do they get that kind of speed? It's all about their custom system, HyperBFT. Basically, a leader proposes a block of trades, the validators all quickly vote, and boom, an agreement is reached. And the result of all that, your orders are locked in, finalized in under a second. We're talking an average latency of just 0.2 seconds. That is the kind of speed that brings all the serious, high-frequency traders to the yard. And the performance numbers, they're just staggering. Hyperliquid can chew through 200,000 orders per second. At its peak, it had a stranglehold on something like 70% of the entire market. But it's more than just a place to trade, it's a whole ecosystem. You've got over 100 apps built right on its chain, lending, yield strategies, you name it. It creates this really sticky environment that makes it hard for users to leave.
But you know how it goes. Every king has a challenger waiting in the wings. And in this story, that challenger is Aster. Aster didn't show up to play by the old rules. It was built for one thing, accessibility. And it came with a seriously aggressive plan to win.
And if you want to know Aster's whole strategy in just one number, here it is, 1001x. That's the crazy amount of leverage it offers. Now, is it unbelievably risky? Absolutely. But a number that big is a powerful, headline-grabbing magnet for retail traders looking for that high-stakes action.
And that aggressive push got a massive dose of credibility from moments just like this. A simple post from CZ, the founder of Binance. I mean, that's one of the biggest names in crypto. That little nod of approval was like a golden ticket. It created this CZ effect that sparked a wave of interest and gave the project instant legitimacy.
And here's where Aster's playbook is completely different from Hyperliquid's. See, with Hyperliquid, you have to go to them, bridge your assets into their walled garden. Aster, on the other hand, comes to you. It supports all the big chains, BNB, Ethereum, Solana. It just rips away all that friction, making it so much easier for anyone to jump in and get started.
And Aster didn't just show up to the fight empty-handed. It brought a whole arsenal of new tools. It has this trade and earn model, where you can use assets that are already earning you yield as collateral, so your money is always working. It's got modes for both beginners and pros, and check this out, a hidden orders feature to protect big trades from those pesky MEV bots that try to front-run you.
All right, so you've got the precision-engineered champ versus the super accessible, feature-packed challenger. Let's put them in the ring, side by side. Time for the tail of the tape.
Okay, this chart really shows you the two different DNAs at play here. Just look at Aster's column. The yield-bearing collateral, multi-chain support, even stock perpetuals. It's all about flexibility and opening up new markets that Hyperliquid, with its laser-focused design, just doesn't cater to. And that privacy feature, that's a huge deal for big money traders.
Now, let's talk about the thing that always matters, money, specifically fees. In some cases, Aster's trading fee is just 1/3 of what Hyperliquid charges. For traders who are making thousands of trades a day, a cost difference that massive isn't just an advantage, it's a game changer. It's a huge reason to switch teams.
Here's the crazy part. Even with all of Aster's new features and those way lower fees, just look at this valuation gap.
With their core trading numbers getting closer and closer, the market was still valuing Hyperliquid at nearly 4 times what it valued Aster.
And that really gets to the heart of this whole thing, right? When you look at the core numbers, the actual activity on the platforms, does a gap this big even make sense? Was the market overvaluing the old champ, or was it just massively undervaluing the new challenger?
All right, so where does all this shake out? Let's get to the verdict in this fight. And, of course, the major risks that are hanging over this entire space.
At the end of the day, if you're a trader, it really comes down to this one simple choice. Do you put your money on Hyperliquid's proven, battle-tested engine and its massive ecosystem? Or do you bet on Aster's easy-to-use platform and its all-out blitz to win the market?
Well, it looks like the market has spoken. By October 2025, wow, the tables didn't just turn, they got completely flipped over. From its dominant 70% share, Hyperliquid plummeted down to just 10%. And Aster? It rocketed up, grabbing nearly 70% of the market for itself. Just a stunning, stunning reversal.
But, and this is a huge but, all that explosive growth comes with some really serious risks you need to know about. That 1001x leverage, it's a recipe for getting liquidated instantly. We've seen system glitches on Acer cause wild price swings, and like anywhere in DeFi, the threat of a smart contract hack is always there. Then you add in worries about a few wallets controlling too much of the supply and the total uncertainty around regulations, and it's clear this is not a space for the faint of heart.
And so this whole saga leaves us with one big, fascinating question for the future of DeFi. As these platforms race to become the AWS of liquidity, the fundamental plumbing for all of crypto trading, what's actually more valuable in the long run? Is it the battle-tested performance of an incumbent like Hyperliquid, or is it the disruptive, user-first innovation of a challenger like Aster? The answer to that is probably going to define the next chapter of decentralized trading.